Hey guys, welcome back to another week of Mortgage Matters in Minutes. I'm your host, Brent Rasmussen, here with Mortgage Specialists. And this week, with the season and everyone back to school in this time of year, that usually new construction takes another big step and people are out looking for new homes. And so today we're going to talk about construction loans because it's a very common question right now and ever, because just like wanting your brand new car, you want a new home, and many times people consider building their own home. And obviously with low inventory right now, new build is a big conversation people are having, just because they might not be able to get what they want being in the area or neighborhoods, and new construction might be the only option. We get lots of calls about new construction. I think it's probably the biggest type of loan that people don't truly understand or know how the steps go. And so we're going to cover kind of three basic types of loans. And obviously construction is a very complicated matter. It's a very long process. I tell a lot of my clients that it's not for the faint of heart, because there's lots of decisions. There's a long time frame. But at the end of it, you get what you want. Generally you get to make your own decisions, and generally you get to pick out things that, are in your best, mind as a decision. So the first one that's the easiest in regards to new construction is the builder builds the home. They carry their own loan to pay for the costs of that home. You agree to sign a contract, and when the house is done, you take out a long-term 30-year fixed, 15-year fixed, normal conventional FHA or VA loan, and you buy the house from them when the house is closed. Or house is finished being built, not closed. At the end, you have a permanent financed loan, and it's a little bit simpler because the builder is carrying the construction loan. And what happens in a construction loan is there's draws, meaning different steps along the way. There's money that's owed to framers, to carpenters, to plumbers, electricians, HVAC, roofing. All the different subcontractors that are putting money into that house need to get paid. And the construction loan itself is generally the type of product that's used to build that home. So the easiest one is getting into a contract with a builder that carries their own construction loan. The second kind is many people will call and say, well, I own some land, I'm going to buy an acreage, and I would like to build my own property, and how do I make that work? And you can obviously do the same steps again, buy the lot, sell it back over to the builder, or use that as a down payment, and that builder can carry the construction loan, and then you get the permanent loan at the end. But a lot of people say, well, I just want to build it myself, or I want to get my own construction loan. And to most banks and lenders, that's much riskier, because you just don't have necessarily the experience, unless you build 5, 10, 20 homes, to carry that construction loan yourself. So what they're going to require for that risk is a larger down payment. And generally, to carry your own construction loan, they're going to want nearly 20% down, or 15%, but generally 20% down, and maybe some other caveats to use of your own money before you start using the bank's, the lender's money, because they want to ensure that you have skin in the game in that project to want to get that done at the end of the day. Generally, new construction takes 9 months, maybe 12 months, but as we've seen lately with supply shortages and contractor shortages, it can take much longer. So that second option of taking out your own construction loan is a little bit more challenging than people would assume. It's not as easy as I just need a loan, go get one. It's all very straightforward. There's a lot of more steps. There's a lot more paperwork to get lien releases and draws paid and bills submitted, all kinds of work. So many times people like that option because they have control over it. It's their interest rate, but people don't realize how much more work that you might have to do along that process to get that to occur properly. The last option, which really hasn't been big lately, and it's not really big here in the Midwest, but it is on the coast, is called a one-time close. And it's a blended option between the options that we talked about, meaning you close one time, and the construction loan and the permanent loan are all one loan. And what do we mean by construction loans and permanent loans? Construction loans are short-term. They're the 9 to 12-month loans. Permanent loans are your long-term 10 to 30-year fixed interest rate loans that are out there. So what they do have for some institutions is a one-time close, meaning you will take a little higher interest rate because we still have to pay for the steps of doing a lot of the paperwork that first year why that home is getting built. And it is a lot more paperwork and follow-up and checking in and making sure people are compensated, making sure that everybody's paid. So at the end of the day, when you own the house, there's nobody that's saying, hey, I didn't get paid, I own part of your home. And that's always the risk with new construction of just something getting missed and slipped in the cracks, or someone going out of business after the process, filing bankruptcy, going under, and that can cause a big havoc and a big stress in regards to that type of process. So there's lots of legalities and processes in place to make sure everything's taken care of. So when it comes to new construction, I can tell you, if you've stuck around for this whole video, it's not as easy and as simple as people may think it to be. People would say, hey, I just want to build my own house, that's what I want. And I would tell people that is not the easiest type of loan to get out there. Can it be done? Sure. Does it happen every single day of the week? Of course. Do we help clients with it and talk through the beginnings, middle, and end and give them all the pros and cons? Yes. But again, it's not the easiest of loans, where there's three kinds. Builder builds their own, takes out their own construction. You close at the end of the day, not having to worry about the construction loan with just your permanent piece. Second is taking out your own construction loan, your own permanent financing, going through more paperwork to follow up with that house to make sure it gets done. And last is the one-time close. So those generally are the three types of loans that are available for new construction that hopefully give you a little bit of education information today. But we're always just a phone call away at 402-991-5153, or you can reach out to us at mtg-specialists.com to read any more blogs or information we have for you. So I hope you have a great day, and we're here to help, and we'll talk to you very soon. See you guys. Mortgage Specialists. Driven, trusted, reliable.